Let's look at a couple of the things that we did add to our shorts. Looking at SBAC. So let's just go to the daily chart. So one of the reasons why we shorted this today, and there's a couple factors as to why. So when you look at this move, this has gone straight up, and it's nothing special. There hasn't been any new technology or deal that they've struck up. It's just gone straight up on light volume. So this stock is a very traditionally light volume stock. Typically, I'll stay out of anything under 1 million shares, but the occasional day it does trade over 1 million shares, and it does have a big enough market cap that you're not going to get into a pump and dump scam. So it is stable enough for me to be in. Does have a big enough market cap. But SBAC is on look at this move, a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candle count. So when you have a powerful candle count, and these aren't just little candles, these are substantial moves to the upside, and your final candle usually is your biggest candle to the upside. So you're on a 10 candle count. You came into a gap fill, which you filled completely and actually busted through. And that's the thing about low volume stocks. They tend to squeeze a little bit more to the upside. That's why we only inched in, got our feet wet into a position. We're prepared to add at some other key levels here. I'm thinking about the 379 one. It would really depend on how the price action gets into that level. If it's a straight shot or if it's a consolidation for a move up, then I'm likely going to wait for the double top. And then ultimately you do have this longer term trend line which is completely far away, but it could be a potential other shorting opportunity if it got up to there and really squeezed. So we've started with a small position, but you did have a 10 candle count. You filled a gap. You came into resistance here. Now the beautiful thing is that you did close above this resistance. So tomorrow we need to see if this price action confirms above. If it confirms above this resistance point, you're likely going to go test this high, but this is extended. This is on a time count. You fill the technical gap. You're into resistance. That's 3 technical factors. And when you actually measure the move, let me just do this for a second, bear with me. When you actually measure this move to this move, and you put it up there, it's roughly the same height. It's the same measured move. The only difference between this move here and this move here is this one has gone more vertical. It's had a quicker volatile uprise versus this steady, consistent buying pressure. So when you have a measured move in a previous cycle that takes you into a similar resistance point, and the fact that you've had no days of consolidation in a 10-day candle count, the probabilities are highly, highly likely that you pull back. That's why I wanted to get some skin in the game and add to a short at this level. Should it go up, we'll certainly be adding at this key level and up here as well. We have to trust the charts. And when I was also doing a little bit more fundamental research, the vice president actually sold 1.5% of his portfolio in the stock about 2 weeks ago, and he sold it at 330-ish. So it was right here in around 330 when I did the calculation. He offloaded about 1.5 million. So it's an insider sell. You're into resistance. You're on a candle count, and you're into a major gap fill. You're extended nonetheless. You have completed a measured move. Those are multiple factors that give you a high probability of a decent pullback. And if you look at the pullback in the stock, they certainly have sharp pullbacks when the stock is extended in these moves. So especially since we're now into the tightening cycle, the markets may seem to finally realize that we're into that, and they could start adjusting. So when key news comes out like this, that we have it in writing, 95 billion a month, institutions have to adjust. So expect the volatility over the next 1 to 2 weeks to continue, because institutions, although it's their job to be in monitoring the price action, they're not as quick as us traders in the markets to adjust to the news, to adjust to the signs in the market, because there's often a little more red tape to sell certain positions, and they have to get many eyes on the prize in terms of, is this the best decision for our clients, etc., and so forth. So the volatility over the next week should continue as institutions and VC money adjust to the new 95 billion figure. Okay. UNG is another one. We pulled the short, added to our short beautifully at the, let me just see what level we added to our short. Oh yeah, on the KOLD it was 1260. So we'll flip to the KOLD after, but beautiful, beautiful. It was into double top we executed the short. And this is the type of price action as a technical trader you really want to see. So just basically analyzing, no fundamentals, all technicals. We'll do the fundamental analysis after, but all technicals here into double top. You've had this extended move. Going back to the completed move, I love these moves when you complete them. They're so powerful. These measured moves of symmetry. So look at this. So to put this measured move, which is this cycle, to this measured move, it's very similar in nature. You have this initial move, bull flag, pop, initial move, bull flag, pop. The only thing is you're completely extended, more extended this time, and you're extended right into double top, and then the reversal took place. Now, we originally had a topping tail that was occurring, which I would have liked to see, but basically this is just a strong reversal day. It's not a topping tail, so it doesn't hold as much strength as a topping tail, but nonetheless, it is still powerful. It's beautiful to see. You filled the gap down here. You had a small bounce off the gap. I expect the selling to continue. Let me just remove that trend line. Where is the selling going to continue? Well, I think you're going to have a bounce here off of this gap fill. Ultimately, you'll head lower. You'll have another minor intraday support level in there. And then as you go lower in the charts, the gaps are a bit bigger. And then finally, I think your last gap down here will get filled before you have some sort of a major retrace of this move. Maybe it's a 50%, maybe it's a 60%. I do think eventually you break this trend line, which will send you potentially to test the double bottom zone. Natural gas moves very quick to the upside, but it moves even faster to the downside. The gaps from the overbought levels are incredibly powerful. Like, look at this gap down. We're talking about let's just measure this move out. So on a close here, you gap down 9% in natural gas in one fell swoop, which is pretty incredible. But good to see. We're positioned nicely now. Let's just flip to the KOLD just to show you how that performed. So the KOLD, beautifully. If you took the short with me this morning, you're deep in the money. A nice 10%, well, not quite. A nice 9.4%. At the highs of the day, it was up 12%. But that is a beautiful reversal candle on the KOLD. I ultimately do think you have a substantial amount of upside. One of the things that support the price action of natural gas heading lower is the simple fact that, natural gas the squeeze on natural gas has really been because of Russia and with the war and what's happening there. Look at the futures chart. You actually did put in a topping tail, so that's pretty awesome to see. Again, you came into resistance. Ultimately, I do think you head to the lower channel here, which will be a nice drop on natural gas. Typically, you can have a retrace up to the 618 on a tail, but as long as you don't close above this tail, this top is in effect, and it's a very, very powerful top. But the fundamental backdrop is now that natural gas has been affected by the war, you really have to take into account the fact that the seasonality period of natural gas is coming into the warmer climate months. So typically, there's roughly the Russian exports in natural gas range from 200 million a day to $800 million a day. So on the high end, it's 800, and the low end, it's 200. We're coming into the low end of the period where typically Europe doesn't require as much natural gas, and the rest of the world as well. So it's going to definitely put a dampen on the demand, which should naturally potentially affect the supply. Obviously, that being said, you still have to use position management with this commodity because it does certainly fly to some extremes. And with the war going on, with natural gas being priced in rubles, there's always the possibility of some shenanigans to happen with Putin and Russia and North America and Europe. But that being said, I think most of the war's implications have been priced in already. You can see most of the commodities have had their shocks and runs. And even with the announcement of Russia wanting payment in rubles for their natural gas and oil, I think that's all priced in, the volatility is priced in, and certainly the demand and supply issues are priced in my opinion. Let's jump over to the final chart here. Yeah, we can touch base on Ethereum. We haven't touched base on Ethereum in a while. So cryptos have obviously seen some downside pressure. It's really good to see that it hit our first Fibonacci level, 382 here. We did pick up some shares on the bounce. So we got a tight stop loss. We're always protecting our profits on the initial bounce because this could always keep trending lower. Should we get a bounce, where do I expect it to go to? Well, your previous support zone, which you sliced through, is up at this 3284 mark. If you get a bounce up to there, that would probably be a great shorting opportunity as well as a place to unload your bounce and your longs. Keep in mind though, now that we're entering another dynamic and cycle in the overall economy, crypto is still considered a risk-off asset. So just like a lot of these tech plays, crypto is still levered to the hills, in my opinion. And when you look at the bigger macro pattern of crypto, you have to really be aware that there certainly is a big pattern at play. And what is that pattern? Well, if you look at this topping formation, one can argue that this is called a head and shoulders or an M-top. And it's really, you had an initial one that triggered here and broke down and you had your initial sell-off. But now you're forming a potentially an even bigger one on basis. And one could argue you can have this as a left shoulder now, and you can have this as a right shoulder that's forming. And if you trigger the neckline, which just so happens to be roughly around there, you measure the downside move of Ethereum, and roughly where would it take you? Now, obviously, it's showing negative 500, but you get the point in the sense that it takes you a lot lower on the charts. So analyzing Ethereum, if you look at Ethereum on the bigger pattern and time scale, it's really been affected by this drop that has occurred in the stock market and the news of the QT, the quantitative tightening. Now, I personally think there's tremendous downside for crypto. I love crypto long term. I'm a crypto bull long term. I plan on buying an absolutely decent amount of my portfolio. About 10 to 15% of my portfolio will be in crypto. That being said, I never go all in all at once. But once the crypto market bottoms out along with the stock market, and they'll be close in terms of time frame, I will be buying Ethereum, Bitcoin, Chainlink, BNB, and maybe a couple others with both hands, especially Bitcoin and Ethereum, because those are going to be tremendous outperformers in the next inflationary cycle. So even though we have inflation now, we're entering a deflationary cycle. So you have to kind of wrap your head around that. The inflationary cycle and deflationary cycle, when I refer to it, is more in the sense that the inflationary period was what the Fed did for the last 3 years. They've caused the inflation to happen, and now it's here, we're dealing with it. But how to deal with it is you go through a deflationary cycle. So, but the next inflationary cycle will be tremendous opportunity. Stocks will be inflated again, assets, as we go through this, yo-yo policy period until eventually something gives. But I still think they got a few more good bubbles in them, the Federal Reserve, before they give up their status as the Federal Reserve, and we look to change the economic policy. and the financial system, and they potentially change their name to something else. But looking at Ethereum, here, massive key support zone broken with a huge impulse move down. You've hit your initial level of support. Whether or not that holds, time will tell. I think the markets are going to adjust pretty quickly to the 95 billion reduction in the balance sheet, along with raising of interest rates. So look for more downside. The downside in crypto certainly happens fast and furious. Now, you have had a pretty big move off this 200, so you could start consolidating lower. The thing that I was looking for this bullish pattern to continue, and like I said, I just analyze the charts. It's not that I am not bullish on crypto. I'm just not bullish right now. Certainly things could change, but you broke this pivot low, which would have been your inside bar bullish consolidation to potentially move higher. But after failing at the 200 here on 1, 2, 3, 4, 5, 6, 7, 8 candles, the pattern finally gave way. And what a coincidence that crypto is finally falling on the back of the Bitcoin Miami conference. So it's the biggest Bitcoin conference in the world. It started today in Miami, and this is when crypto took its biggest sell-off. So notice all the hype leading into the conference. That's why you potentially had this rally. And it's the old, buy the rumor, sell the news event kind of thing that occurred today. So really, really incredible, the price action. The technicals were screaming for a pullback. We did short Bitcoin, and Ethereum. We issued levels to our members to pick those shorts up with us. So excellent to those of you that did. We still see further downside, so we're not going to cover our shorts. That being said, it could bounce up a little bit, but I do think you start making a bearish flag before breaking down to the next level. That would be roughly here at the 2900 level. Once you break through that, you'll have a minor level here, but your next major level's at the 2511 zone and this upsloping trend line. When you break through that trend line, you test this pivot low, you break through that pivot low, you're going to 1700, which is a long way down from current levels. And it's definitely rough to see your portfolio, your crypto portfolio, go that way. Rather, potentially shorting, you can maximize the down leg and the up leg. So let's just look at Bitcoin. Bitcoin's price action is pretty interesting too. We'll just go on BitBit. So daily chart, you're coming into resistance here. So sorry, you already hit resistance, which is your zone here. Oh, this chart's not as accurate. Wow. Let's do this one. There's my chart. Okay. So notice how the top of your channel was your neckline, which you broke down here, triggered this sell-off. And you came up to test the neckline again after you did it 1, 2, 3 times. The neckline just so happened to coincide with the 200-day moving average. You've now broken this uptrend formation. More downside is highly probable. I do think you eventually come test this pivot low in the lower range of this channel. Whether or not the selling happens in one fell swoop, it certainly can happen. It certainly could happen quickly and ferociously, and it would potentially catch a lot of people off guard. We got some couple key levels that we will be trading. I won't be issuing them as a swing trade alert. I'll only be issuing, I don't issue the minor levels. I trade those myself because I can be more active compared to a lot of you. However, I will be issuing the major buy alert level, which is roughly down to 37,000 for a bounce. And then we'll get out of that swing trade and look to potentially go to this sloping trend line here, and then eventually lower. But notice the move in Bitcoin here. You have this down sloping, what looks to be a bear flag, and then you have a massive pop. Now you have what looks to be a bear flag that's looking to break up, but it's instead breaking down. So this channel is down sloping, this channel is up sloping. The psychology around investors is typically they would see a down sloping channel and think, oh, the price action is going much lower. But that's not usually the case. Usually you do see down sloping channels and then a breakout. And the opposite is true. Usually when you see up sloping channels, they break down. So understanding those two simple but high correlation patterns will certainly help your trading ability. And when you look at, so those are some micro trend analysis. When you look at the macro, this is a huge head and shoulders pattern putting in here. You have a left shoulder, you have a right shoulder. This neckline breaks, and you see some substantial downside in the markets from here, which you simply have to take a plumb line, drop it down all the way to the neckline, and you go testing these pivot zones down there. That's a substantial topping pattern that, if it plays out and if the scenario of recession comes true, you'll have some incredible buying opportunities pretty much at the pre-COVID highs, I certainly think. I would start accumulating at the 19,000, the 17,000, the 14,000, and if it for some reason got sub 10,000, you back up the truck. I'll be maxing my position out quickly and not inching in. I would be putting a substantial amount of capital to work. Well, as we look forward to the next couple weeks, there's several things that we need to pay attention to. Obviously, the markets I expect to adjust. The volatility is going to increase over the next 1 to 2 days. I still think, when you look at the QQQ and the S&P 500, the volume has still been fairly light on average. So we have to watch, do we start increasing in volume, specifically the sell volume? Are we going to see substantial spikes in the sell volume now that institutions have to adjust to the new policy? And that is something I'm looking out for. We are also heading into the new inflationary numbers mid-month, as well as the FOMC meeting mid-month. So those are going to be key events, key economic data. Watching lumber, does it continue to fall? Watching yields and bonds. Do bonds rise? Do yields rise? What's going to occur there? Yields have been on a substantial tear, so they've been putting pressure on everything. And finally, what is the price action of stocks leading into earnings? That is typically going to foreshadow whether they miss or they beat earnings. And frankly, now that we can expect inflation to be in the next earnings cycle, we can expect the supply chains, we can expect the shutdowns in Russia, I think a lot of companies are going to surprisingly miss, and it's going to shred the stocks. Just like we saw at the peak, close to the peak in November when companies were reporting earnings, stocks that missed were shredded. Now that we've had a bounce, stocks have been, had a terrific move off the lows. I think if they miss earnings again, you see those rapid declines like we once saw. This tightening cycle will happen fast. The markets are moving on a historical basis, double to triple the speed of what we're usually ready for. So we have to be nimble, we have to be ready. There's tons of opportunity amidst the volatility. We just got to be smart with our positions. We've got to leg into some positions, just get some exposure into key levels, and let the charts guide us. Don't listen to anything else. We knew a short was coming, and we pulled the trades on many shorts because the charts were telling us a pullback was needed, and there was light volume, and it was suspect, and of course, with now the news pumping up quantitative tightening, that's the catalyst. So the charts are always, foreshadowing something, in my opinion, before the news